Good morning and welcome to Trading Hour. I am Reema Tendulkar. With me are Sumaira Abdi and Pavitra Parekh. Well, girls, it looks like there's a Diwali party, this week for our markets. We're up for the third day in a row. And what a big move. Yesterday as well was a solid session for our markets. We had a bit of a breakout. And today we built on that strength, fueled by that monstrous Wall Street rally. Currently, the benchmark indices are up close to about 1%. The Nifty has surpassed the October high. The previous October high was about 17,428, and today we've managed to cross above that level. We're also watching very closely to the 50-day moving average. We went ahead of that, but right now we're just trading slightly below 17,491. This is a level that the markets have not conclusively conquered since September. So that's over a month. So let's see whether we can cross that 50-day moving average. As I said, it's thanks to a big global rally. Wall Street had a mega session yesterday. Dow was up 2%. Asia is nudging higher, and the Dow futures is currently up close to about 500 points. The earnings season is heating up here in India. This is the second week of the earnings season. And a quick snapshot of what we've seen so far. Banking numbers better than what the street was anticipating, especially Federal Bank as well as HDFC Bank. IT, not as bad as what the street was fearing. There were a few misses like Wipro, but on the whole, not as bad what the street was anticipating. The margin performance, in fact, has been better than street expectations. Cement has been a miss, a big miss, in fact. ACC, Heidelberg, Shree Cement, even Kesoram Industries. We chatted with the management yesterday, and even they indicated that there is the mismatch between the cost of production and the price that they're selling at is close to 60 rupees per bag, and that's pretty steep. So unless the cost pressures come down, the expectation is that the cost of production will come down, raw material, etc., which will fuel an improvement in EBITDA going ahead. And finally, retail, all of them are pointing to some amount of rural stress, the lower ticket price being under pressure. Hi.
Hi, good morning. So, like you said, it's a green screen across the board. And once again, today, a bulk of the gains are coming through from the banking pack, especially the PSU bank. So, if you can pull that index up, you'll see that just today, that the Nifty PSU bank index is up almost 3%. In the past 5 days, it's up over 6%. That is the kind of trend that we've seen in this entire pack. In addition to this, you have some of the FMCG names which are doing well. So, some of the consumer names will be up on your screen, as well as some of the auto names which have, of course, been rallying. And on the downside, there are just around 5 or 6 stocks which are trading in the red. So Sumaira, really looks like what Reema was saying, it looks like an early Diwali for us.
All right, and we'll take it with both hands.
Yeah.
So let's tell you all that we have lined up for you today. It's bullish global cues which lead the Indian market higher. All sectors are trading with gains. Key indices are outperforming the broader market. We'll talk about the way forward for the market and also what has been the scorecard for the earnings season so far. Joining in will be Jigar Mistry of Buoyant Capital.
Over 5 crore shares of Z Entertainment change hands in a big block deal. We get you up to speed with all of the details, and we'll also be joined by Elara Capital's Karan Taurani to discuss more about this and the way forward for the stock.
Finally, Canfin Homes, TVs Motors, Adani Transmission, all these stocks are buzzing in trade today. So what has gotten them so excited? All details coming up a little bit later. All of this and much more lined up over the next 60 minutes.
But let's begin the show by dissecting the earnings season that we've seen so far. Jigar Mistry of Buoyant Capital is now with us on the show. Jigar, what would be your key takeaways from what we've seen so far? What stood out for you? The ratio of upgrades to downgrades, the EPS changes that you've had to make?
Yes, good morning, Reema. Thank you for inviting me to your show. I think you summarized it pretty well at the start of the show, right? But if we want to delve a little deeper, then let's break it down into the top 4 or 5 sectors. Banking, clearly, we have seen system-wide expansion of NIMs. Something that was theoretically argued even by us that, rising interest rates should result in expanding NIMs because assets get priced much faster than liabilities. And that has happened. Now, historically, what also happens is that, rising interest rate brings sort of, questionable asset quality under some bit of pressure. But, given that a large part of incremental demand for the last 5 or 6 years was driven by retail lending, we doubt if that would play out this time around. And yes, the numbers have been good. A few of them you mentioned. The only difference we are making here is that while we are staying with the privates, if you want to increase the risk, we believe microfinance could be the end of, at the end of their bad quarters when they report. So, something like Bandhan or Satin or something, some of those names could have a reasonably okay quarter, but I think that would be the bottom. And that's the way we are preferring to increase the risk in the lending financial space. Technology, you were right. It's not been as bad, but come to think of it, each and every company has not, despite depreciating rupee, has not guided to margin expansions. And if at all, they've come towards the lower end of their guidance for.
All right, looks like we have a bit of a problem with Jigar's feed, so we're just going to try to reconnect that line. But in the meantime, a quick look at the markets, which are only moving higher. It's over 1% in terms of a gain that we are seeing. So the Nifty is currently around 170 points higher. You have the mid-cap index, which is slightly underperforming today, so that one will also come up for you. That is seeing a gain of just around 0.6% right now. Remember, yesterday also it was the sector which, the space which saw a little bit of an underperformance. And the Nifty bank is solid as ever. It's up around 360 points right now, led by the likes of SBI, IndusInd, those ones looking very good. By the way, today Reliance is also doing very well. For the past few days it was a little bit subdued, but today the Reliance stock is up almost 2%. Remember, it does post earnings in this week on Friday itself, so we are watching by for that. But ahead of that, this stock looks quite good. Reliance is up around 2%. But Jigar is back with us. Jigar, I'm sorry, I think we lost your connection midway, but you were taking us through the tech companies and how, these companies haven't really guided for too much of a margin expansion, which could be a point of worry.
Right. And, this could arguably be the last of the double-digit quarters. And incrementally, we would look at single-digit with valuations not really below average mean levels, right? So you buy these companies because they can arguably go faster, but they are not. And then you are not getting it at a reasonably good valuation. So those numbers have not yet been great so far. I think the one to watch out for will be FMCG, because at least we are seeing, the urban fare much better than the rural. And a lot of these urban facing companies, at least until we get a clarity on monsoons, will likely do much better. So something like a Hindustan Unilever would be something which we are keenly watching. The other two large sectors, oil and gas and maybe automobiles, it's a bit of a question because, refiners, they've already put in the windfall tax. They're now talking about, doing the similar thing on the upstream as well. So gas, which has typically been great so far, might not, be a great investment as we speak. And auto, frankly, the best performing sector over the last 1 year. But I think what has happened so far in terms of stock performance is that it has risen because of the rise in the embedded value. So a lot of PE investors, because they are sort of spraying and praying, are essentially investing everywhere. And until we as secondary market investors are able to understand who could be the winner of the lot, our gains might not be that high in this sector going forward. So I think the places we are actively watching clearly are banking and relative lending spaces, few domestic facing sectors like hotels, etc., and FMCG selectively on the urban place.
Hi, Jigar. Morning. What has been that one standout performance for you so far, from your universe of stocks?
HCL Tech is something that we own even within this space. And I think if you look at the tech names, it's the first time that the growth has come into such a tight band, right? Everyone was between like 3 and 5.3% or 3.5 and 5.3% CC. Now, this is one place where, it has not, the stocks are reasonably down from their, 52-week highs. But this is one company which we are relatively better positioned in terms of where the street is. So that's one company which looks reasonably good. Otherwise, I think, whatever numbers, I'm just going through the list here. But yeah, Federal Bank was good, HDFC Bank was good. Cement has been bad as estimated. And again, this could be the worst quarter because your coal prices and everything else was much higher. So going forward, it could be interesting, but I think HCL Tech did stand out vis-a-vis the companies that we own among the results reported so far.
Okay, so HCL Tech is the standout performer of the earnings season so far, according to Jigar. Can you talk about the FMCG stocks which are unaffected by the rural weakness, which have a greater urban presence? Nestle is a stock which comes to my mind, which is a low rural presence. But could you tell us the other names?
Right. Also, Rima, what's happening is that raw material and fuel. I think not just of these places, but all consumption facing. If you take as a play, then you are seeing raw materials and fuel, both of those costs subsiding. So some auto names might also make the cut here if you're just talking of quarterly results. Also, Hindustan Unilever has 17 odd categories, and there are several. We don't really understand the breakdown of the EBITDA per se vis-a-vis what drives what, and therefore our estimate is that we'll likely see a large amount of margin expansion from few of those categories within Hindustan Unilever, and that's one business which is looking really interesting to us at this juncture.
All right. Jigar, we don't have the metal earnings in, but I want to ask you about this space anyway. We have been talking about the kind of cuts that have come through here. Do you think that there's more pain for this space, and how do you expect the earnings also to pan out here?
Hi, Pavitra. So yes, the sad part of metals is that, even when the physical demand is reasonably strong, which I suspect is the case with, say, aluminum or zinc, because these metals are listed on the indices, so London Metal Exchange or Shanghai Composite Exchange. In that scenario, you have liquidity impacting their pricing per se. So when central bank liquidity has gone down by, say, about $1.5 trillion from its peak, the withdrawal of liquidity has not just happened from emerging markets, but also from a lot of this commodity plays. And that is impacting the valuation. If you look at the regional premia, so typically a company, when they sell, they take the LME and then they take the regional premia, which is indicative of the physical tightness of that commodity, and that is still going strong. So sadly, most of these companies, when they report and when they sell at the price listed on LME, and therefore the numbers will not be great. Steel, which is not listed, and whatever does trade on LMEs does not attract a lot of volumes. That might be relatively better, but then India did impose, an export duty, and that would be, companies would be suffering on that account. So at one point in time, what looked like a great driver of earnings for Nifty, and it was the case, right? Top 4 companies in FY22, 3 of which were, or rather all 4 commodities, if you include ONGC, are actually going to lag the Nifty earnings. So in one stretch, the quality of Nifty earnings is improving, but metals will be the only index, I think, in FY sort of 23 and 24 to report a negative growth in earnings.
Hi, welcome back to Trading Hour. The focus now shifts to the commodity space. Manisha joins in with the focus today on agricultural commodities. Hi, Manisha, morning.
Sumaira, thank you for that. We do understand that there's a cabinet meeting today, and the sole agenda clearly is increasing the MSP for the Rabi crops. This usually does come in the month of September. That's exactly what we have seen in last couple of years. But this time around, it is mid-October, and we still are awaiting those final numbers there. Well, as per the CACP recommendations, we do understand that the MSP hike has been recommended anywhere between 3 to 9%. And the important Rabi crops that we are looking at in sense of MSPs, wheat and other 6 crops. So you have pulses, mustard, barley. This is where the MSP for these Rabi crops is awaited. The expectation within the industry also is that you might be looking at higher MSP, especially coming in case of the pulses here. That is because the input cost for many of these commodities has gone up. Farmers are anticipating even higher MSP because the cost of seeds, fertilizers, labor, transportation, pesticides, all of those has actually gone in. So what we are looking at in sense of MSPs for these crops, and current MSPs for the wheat crops stand at these levels. For wheat, it is 2,015 rupees per quintal. And if you look at the prices for wheat right now, it is much at around 2,800 rupees per quintal. Same is the case with other commodities as well, whether you look at barley or gram. for lentils. Mustard MSP is at 5,050, while the prices are trading at around 62 to 6,500 on the higher side right now. Sunflower at 5,400, and here as well, prices are trading above 6,000. So the markets do anticipate, one, of course, it is sowing season, it is off season, there is no new arrival coming into the market, so the prices in any case are on the higher side. So this is one thing that the agriculture as a sector, whether you're watching for commodity or sowing or inflation, these MSP numbers for Rabi crop are going to be watched out.
All right, Manisha, thanks a lot for all of those details. But with that, it's time for a short break now. Like we told you, it's a good day of trade on the Lal Street. So when we come back, we'll discuss the technicals. Mitesh Thakkar will also be with us, and we'll bring you some of his top trading bets.
To all the viewers of CNBC-TV18, wish you a very happy, prosperous and glowing Diwali.
New car launches, new wider highways, fast doorstep deliveries are all signs of a boom in India's transportation and logistics team. Now you too can be a part of it with ICICI Prudential Transportation and Logistics Fund that aims to accelerate your portfolio. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
हर मुश्किल दरअसल एक मौका है जब जज्बा जीत का साथ हो सड़कें चाहे जैसी हों मंजिल चाहे दूर से ही खुद पे मुझे भरोसा है मानूंगा मैं हार नहीं
टाटा इंट्रा V50 सब कुछ उठाए हर दिन जिताए
Will snow days be a thing of the past? Or are we smarter than that?
ऑफ ऑन ऑफ अब पॉलिसी पे 1000 रुपए खरीदें पे एज यू गो कार इंश्योरेंस जब कार चले तो इंश्योरेंस करो ऑन वरना करो पॉज और पैसे बचाओ
की शादी होती है मेहर के बच्चों के बच्चे होते हैं
बात अगर लंबे चलने की हो तो सिर्फ न्यू एवर रेडी अल्टीमा alkaline batteries with latest turbo lock technology that last up to 400% longer new ever ready Ultima
दादा आप फ्लाइट कहाँ बुक करते हो
इक्सिगो
ट्रेन
इक्सिगो
बस
इक्सिगो
साइकिल
इक्सिगो
ज्यादा बोलिए
बड़ो ज्यादा बोलिए
और कौन सा ऐप डाउनलोड करना चाहिए
इक्सिगो
और निकल
लो You guys all right?
या पर आपकी गाड़ी थोड़ी
कार एक्को से इंश्योर्ड है सुपर फास्ट क्लेम सेटलमेंट हो जाता है अरे मैं स्ट्रेस नहीं ले रहा हूँ तू क्यों ले रहा है No more road rage.
He's so cool.
Acco, welcome change.
To be or not to be cut to be cut to be cut क्या हो रहा है यार ये एक्टर से कट पुतला बना दिया है अबे कट करना ही है तो अपनी लाइफ से ये पुरानी लाइट्स कट करो मतलब इसका एलईडी लगाइए और अपने पावर बिल्स को और एनवायरमेंटल डैमेज को भी कहिए Cut. That is the question. Cut! Cisca LED. Light years ahead.
Cisca.
Welcome back. You're still tuned into Trading Hour, and let's talk about some individual stocks which are really moving around in trade today. Adani Transmission is one of them. It's rallying in trade after a strong operational update for the second quarter. It's up around 3%. So Vivek is standing by to take us through all the details. Vivek.
Well, good morning. That's right. So what actually happened in Adani Transmission is that the company updated the exchanges regarding the operational updates for Q2. And it's been a good operational performance by Adani Transmission in the quarter gone by. So what's actually happened is that the company managed to post a good, robust operational performance as far as the transmission segment was concerned. And in fact, it operated the transmission lines at northwards of 99.7%, which is very strong. When you're talking about the distribution business, the distribution utility business actually saw an uptick of over 13% in terms of the units that the company managed to process. Also, when you're talking about the distribution loss, the company managed to tighten its distribution loss, and when you're talking about this particular loss, it came in at around 6% for Q2 versus 7.64% last year around. So again, tightening the losses as well as seeing some amount of growth as far as the transmission segment is concerned is what is keeping the stock active in the session today.
Okay, thank you very much for that. Let's move on and talk about Can Fin Homes. That's on our radar on the back of their quarterly numbers. Abhishek is standing by with the details and what brokerages are saying. Abhishek.
Well, Rima, to begin with, it's a mixed set of numbers coming in from Can Fin Homes. The standard asset provision is at 33.5 crore. This is surprising given the fact that, a book has not grown much or the provisions are on the higher side, which may suggest that they might have provided for accounts that are written off from the SMA 1 and 2 category, given the fact that net NPA in absolute value has increased more than 23% quarter-on-quarter. The net interest margin, despite strong disbursements and AUM growth, has declined on a sequential basis, coming down to 3.55% when compared to 3.6%. This is a negative surprise given the fact that non-salaried segment has grown much faster than the salaried segment. So tax payment was at 30.1% of the PBT versus 25.8% of the PBT in the previous quarter. AUM growth remained healthy at 22.2% YOY and about 4.7% sequentially. However, operating profits were weak given the fact that they grew by just 0.5% on a sequential basis. Now, provision coverage ratio has declined sharply to about 43.4% when compared to 54.4% in the previous quarter. Versus our poll, the NII was ahead of our estimate. However, the PAT was slightly below our poll. Now, brokerages have a mixed recommendation on the stock. We have a buy recommendation coming in from Jefferies with a target price of 750 per share. And we have Investec who have a hold rating on the stock with a target price of 625 per share. Back to you.
Thank you very much for that. Let's invite Mitesh Thakkar of earningswave.com on the show now. Mitesh, we've crossed last week the Friday's high of about 17,350. We've built on that quite conclusively, but right now we're struggling to breach past that 50-day moving average. What have you made of the day's trading action, and do you think there is upside left in the markets right now?
Good afternoon, Rima. I think, yes, there is a good amount of upside left. I think, you will have days, when you will move up and then, you'll meet a supply pivot and then possibly see the next few hours kind of Nifty consolidating around that supply pivot. But I think overall we should head towards 750, 17,800. We were actually on Friday and Thursday looking at targets of 17,580, 560 to begin with, and then 750, 800 is the final target zone in the short term. So I think that strength is still visible on the charts. The good thing is that stocks like Reliance have started participating along with the fact that the bank Nifty and the IT stocks were already in an upward trajectory. So I think broadly declines now would be good opportunities to enter on the long side, and anything close to about 17,450, 440. I think those index level, I think, I would be a buyer with a 60-point kind of a stop for targets of 17,600 and then eventually 17,800.
Any stocks? Mitesh, so you are bullish in the markets. You expect the Nifty to head to levels of 17,750, 17,800. Would your stock recommendations also be on the buy side, and which ones would they be?
Oh, yes, very much. I think both my stock recommendations are on the long side. So I have a buy on Siemens with a stop below levels of 2,800 for targets of 2,885. And the other one is Ultratech Cement. After a big correction in the cement stocks, this has given some kind of a reversal from oversold levels, though it's hit a high of 200 average, but I think eventually it should cross it. So this is a buy. Keep a stop below levels of 63.30 and look for targets of around 6,500 here.
All right, Mitesh, thanks a lot for taking us through those individual trades that you're recommending. But let's talk about some earnings. The big one due today, this is from LNT Tech. So Rima is going to take us through what we can expect this time around. Rima, mid-cap IT.
Well, it's going to be important because Tata Elxsi is a similar ER&D play, and we know Tata Elxsi's earnings were softer than street expectations. Now, Tata Elxsi trades at very high valuation multiples. So when LNT Tech is trading at 30 times forward multiple, Tata Elxsi is almost at 60 times. So when you are trading at very high, valuation multiples, the margin of error is low, which is why when there is a miss, you see a sharp decline in the stock price. So in LNT Tech, but it also, suffers from the same thing. The valuations are very high compared to the rest of the pack. So watch for the numbers because the ER&D space, going by Tata Elxsi's numbers, has shown some slowdown. The top line growth is seen at 2.9% in dollar terms. In constant currency terms, it will be a growth of 4.5%. So fairly steady, and it will be driven by the ramp up of deals that the company won earlier. Margins will decline on a quarter-on-quarter basis because of the wage hikes that the company has given effective 1st of July. And that's the reason why the profit will largely be flat on a sequential basis. The key is going to be their FY23 guidance. Now, unlike in Infosys or in HCL Tech, which guides in constant currency terms, which basically means that irrespective of the fact that the euro depreciates, the pound depreciates against the dollar, this constant currency revenue growth guidance remains intact. But LNT Tech guides in US dollars, which means that when euro and the pound, the yen, and all the other currencies depreciate, its US revenues come under pressure. Its current guidance is 13.5 to 15.5%. Will this be lowered? Now, Kotak says it could retain the guidance, but the actual growth will be closer to the lower end, while CLSA says they could lower the USD FY23 revenue guidance. And what about margins? The current guidance is EBIT margins will be above 18%. Do they hold on to that? And finally, in terms of commentary, because they have exposure to high-tech, telecom, medical devices, and these are segments in the engineering and R&D space which can see a slowdown when things get tough. So these are the expectations from L&T Tech this time. We'll get into a very short break, but on the other side, we'll put the spotlight on TVS Motors. Welcome back. Up about 0.9% on the benchmark indices, but we have slipped from the day's high. The Nifty had crossed that 17,500 mark. So from that level, we're down close to about 50 points. Some interesting moves coming through. Maharashtra Seamless's numbers look pretty good. The revenues were up 48%. The profit had gone up by close to about 86%. The cash on the books is close to about 334 crore, but the stock has slipped close to about 4.5% in trade, despite strong numbers coming through. Bear in mind, though, maybe it's run up in anticipation of good numbers. It's up 61% in the last 1 year, but today the stock is down despite good numbers. India Mart is rallying close to about 2.5%. Probably a rub-off impact of Just Dial, which reported numbers earlier, and Just Dial is showing a quarter-on-quarter improvement in all its parameters for the second consecutive quarter. So India Mart has also risen close to about 2.5%. But let's talk about TVS Motors. That's the big winner, surging in trade. Sonia standing by with a deep dive on the stock.
Well, thanks a lot for that. So TVS Motors hit a fresh high today. The stock, in fact, is the strongest auto stock. It's up 74% in 2022. While the Nifty auto index is up just about 14% this year. So there's a clear outperformance that we've seen. Now, TVS Motor is the only two-wheeler maker to substantially expand its presence in all high-growth categories over the past decade, and hence the outperformance in the stock. So we decided to do a deep dive and take a look at the market share gains that TVS has seen over the last 8 years in several categories. Let's start with the premium motorcycle segment, the 150 to 250cc segment. TVS Motors market share has risen from just 12.3% way back in FY15 all the way to almost 26% in FY22. Now, this market share gain in the premium motorcycle segment was led by a very strong performance by the Apache brand, and TVS last year also launched the Apache RTR 160, which has seen a great response. Let's move on now to the scooter segment, where they're not too far behind in terms of gains. Way back in FY15, they had just 15.2% market share, and now it's at 20% due to the success of two of their brands, the TVS Jupiter and the Ntorq. Of course, they've gained quite a bit of ground in the electric vehicle space and in the export market as well. So let's take a look at the export market motorcycle share. Now, that was just 13% of the industry exports came from TVS Motor way back in FY15. That has gone up all the way to 25.1%. And, that just goes to show that, the margins are higher in the export market, and hence realizations for TVS has picked up as well. And that has helped with the overall margin picture coming in at 9 to 10% plus. But how are the valuations stacked up, you would ask? it's not too expensive compared to its 5-year average. So TVS Motor currently trades at about 29.4 times FY24, and the last 5-year average is 28 times, and hence perhaps the stock is continues to gain ground. Back to you.
Welcome back. You're still tuned into Trading Hour on CNBC TV18. For the market, it's looking up 150 points higher. The Nifty Bank has come off a tad, but it's still holding up quite well. But right now, it has definitely seen a little bit of a fall. It's currently around 315 points in the green. But let's talk about Z Entertainment now. Over 5 crore shares of Z Entertainment changed hands in a big block deal. This was anticipated, of course. Remember, in April, Invesco had sold around 8% stake as well in Z Entertainment, and then currently they're left with around 4.6% stake. So to discuss this deal, the way forward for the stock and what the merged entity could really look like, we have Karan Taurani, research analyst at Elara Securities, joining us now. Karan, good morning and thanks a lot for joining us. You know, this block deal was anticipated. We, of course, there were expectations that this would come through. It's come through this morning. How are you looking at it? Do you think that this is really just a cleanup trade by Invesco?
Hi, Pavitra. Good morning. Pleasure to be here. Basically, if you look at this was like an overhang for the stock, which was there. We saw 6 months back as well, Invesco did sell out their partial stake. And there was a lock-in, which expired, I think, on the 13th or 14th of October. And now they've sold some more stake as well. So definitely, this was on expected lines that something of this sort could happen. But I don't think it has any sort of an impact in terms of the company's performance in the near to medium term, or in terms of the synergies that could draw out because of this merger, and in terms of valuations as well. So, we believe at these valuations, the risk reward remains to be very favorable for an investor. I think, the structural story for the merger is very, very strong. I think there is a big business model here to be made in terms of the OTT platform side business. Because recently, if you look at Hotstar, they have lost the bid for IPL as well. So Hotstar, and if Sony, Live, and ZEE5 as an OTT platform come together, there will be a lot of cost synergies there as well. And in terms of revenue size, they would somewhere come in par in terms of a Hotstar, because Hotstar has lost IPL.
Could you give us some numbers, Karan? What would the merged entity look like? And what are the synergies that you anticipate in terms of numbers?
So if you look at the merged entity, I think in terms of numbers, they will, have an ad market share of somewhere close to around 28-29% in terms of the overall TV advertising market. In terms of the subscription market, the share numbers again could be around 8 to 10% in terms of the TV subscription revenue base. So we're looking at somewhere, a revenue base which is largely on par with Star over here in terms of sheer size. They will be at number 2, but there is always a potential, for the revenue numbers to scale up if the performance is good in terms of content, in terms of viewership gain for them. In terms of EBITDA margin, we are looking for synergies there, because if you look at the cost side, so there are 2 synergies here. One is the revenue synergy, other is the cost synergy. We don't believe that there will be revenue synergies immediately in the near term, because I don't see them, kind of going for ad price hikes. That is, purely basis content, as pointed out last time. It's not going to be very easy to get ad price hike in these kind of markets. Similar is the case with subscription revenue as well. Not much of synergy there, because you can't really go and change your rev share arrangement with the distributors. But I think the immediate or the near-term synergies would be more in terms of cost. It could be somewhat in terms of the content cost, employee cost, and some kind of, the efficiency also coming because of the loss-making channels or the low-margin channels kind of shutting down. So basis that, we've assumed a synergy impact of close to, 450 to 600 crores in terms of the cost line, which flows to your PAT. And what we've done is that we've valued this company on an SOTP basis, because the OTT business is making hefty losses right now. I don't think it's correct to, value that business right now, because currently India is a very highly fragmented market. Content costs are phenomenally high, and OTT is more of a long gestation business model which is there. So we can't foresee profitability the next 3 to 5 years, at least for now, unless the markets gets consolidated from here. So what we've done is that we've given a broadcasting multiple of almost about 19 to 20 times for the TV business, and our PAT estimates for the TV business are somewhere around 3,500 crores, excluding the OTT losses. So that's the broadcasting business. Then we have valued the cash infusion by Sony, which is around 11,000 crores. We have valued the OTT business separately by giving it a very low multiple in terms of EV sales for now, because currently the business is loss-making in nature. And we've given that multiple of about 4.5 times on the OTT business. So putting everything together, I think what we're getting is a combined entity market cap of almost about 85 to 90,000 crores. And if you factor in the current stake of Z in the merged entity, which is 47%, which is the Z listed entity right now, the target price right now is somewhere closer to 420 rupees.
All right, got that. So Karan, you said that, currently the cost synergies with this could be around 450 to 600 crores. The revenue synergies perhaps will come into play at a later time, and it won't be something that we'll get to see immediately. Just one quick question, currently Invesco is left with 4.6% stake. Do you see them selling this remaining stake as well to the promoters, perhaps once the, merged entity gets relisted?
I mean, Invesco have actually been, long-term holders. It's not that, it was only the deal wherein, they kind of increased the stake and they added when, Z was searching for a strategic partner. Otherwise, prior to that, Invesco, have been long-term holders. So one does not know in terms of how things are going to pan out. There also could be a likelihood that they might stick on to this 4.5% over the long term as well.
Karan, what's the risk in Z right now? In the past as well, we saw the stock price inch up to levels of 300. Then there was a sell-off. Once again, it started rebounding. But your target price is 420. What's the risk that lies between today and your target price, according to you?
So risk, I think, of course, one is, of course, the converging growth rates in the broadcasting industry, the threat from 5G, because 4G was an era which really took away the eyeballs towards digital in a very big way in terms of video consumption and social media, which is there. Time spent numbers are moving, very aggressively towards digital from the traditional media platform. And I think within that, for now, I think it is the print and radio, other mediums which are severely impacted. TV that way has not seen a big pinch as such. But one does not know in terms of how the technological disruption pans out in Web 3.0. You could actually see that TV ends up being like a big loser, because globally, if you look at the numbers right now in terms of TV share, they are somewhere closer to 25 to 26%. India, even today, right now as we speak, is at 35 to 38%. So what we have assumed is that because the ARPUs in India are very low, I think TV numbers will remain in the band of 33 to 35% over medium term. But one does not know Web 3.0 technological disruptions, if that really picks up. And if the numbers actually trend downward significantly, that could have a big negative impact, because whatever valuation multiples or whatever business valuation we assign today for Z Entertainment, it is more coming, from the TV broadcasting business.
What's the probability of this bear case playing out in your mind? That 5G, Web 3.0, all of them disrupt TV and the revenues suffer to a great extent?
I think it's a 30% probability for now, but we'll have to see, once the 5G launch happens, what kind of technologies are launched, how people actually look after it, how people actually hooked onto it. I think that, only time will tell. But I think, clearly one more thing here is that unless you don't see like rapid cord cutting, because cord shaving, selective viewing, these are trends which are happening since the last 2 to 3 years. I mean, the kind of consumption that people would have on TV, the time spent is coming down every year slowly. We are also seeing trends where there are only certain genres, like maybe sports, news, and certain large-scale GEC programs wherein TV is viewed, and a lot of infotainment, a lot of other non-focused genres have actually moved direct to OTT. So we have seen that trend, being there. But one can't forget the fact that unless we see a rapid cord cutting, that every household or most of the households actually say that I don't want a TV set-top box and I want to go only with internet. I think that is an alarming sign, which I don't see coming, because India, I think there are too many issues in terms of data speeds as well. I mean, all to say, broadband penetration level numbers today also in India are not more than 14-15%. So I think broadband penetration, if it goes up to 30-40% in the next 3-4 years, that could be some articulatory risk, for the broadcasting segment.
Okay, thank you very much, Karan, for joining in. His target price in Z Entertainment is 420. He's penciling in significant synergies after the Z and Sony merger takes place, and the block deal which has taken place perhaps paves the way for that merger as well. As of now, No one can say what Invesco is going to do with its balanced 4.6% stake in Z Entertainment, but the stock currently is up close to about 4%. Interesting takeaways from Ilara about what the risk is for Z Entertainment from here on, and it all lies whether if 5G spreads and it becomes ubiquitous, will that result in more OTT consumption, which brings down TV consumption and starts hurting broadcasters like Z Entertainment?
Hi, welcome back. You're watching Trading Hour. Over the weekend, my colleague Anuj Singhal had the chance to speak with Rare Enterprises, Utpal Sheth, a rare voice indeed. And they've talked about the market, stocks, and most importantly, Anuj also wanted to understand what made the late Rakesh Jhunjhunwala, or as we knew him as the big bull, invest in a stock like Titan.
Rare has been synonym with Titan. So what really was one thing about Titan that led to this investment and the fact that you managed to hold on for so long?
And the intangible that we saw in Titan was the culture that Titan had. And that culture was visible not just at the top management team level, that it was, not just in the corporate office, but in the factory workshop. I remember in one of my meetings, there was this 10th grade pass worker who was working on in the factory. And I asked him, what is your annual target? Hoping that he'll give me some number which will give me a clue. And he said, I have to generate 30% on the value of this machinery that I'm working on. That was his concept of 30% return on capital employed. When the worker on the shop floor of a company thinks in terms of return on capital employed, that is a culture that we would like to back.
All right, very interesting chat there. We're going to keep bringing you snippets of this through the day on the channel as well. But with that, we're going to wind down. The market is up 1%. The mid-cap index is underperforming a little bit today. The same thing that we saw yesterday. So it's around 0.6% in the green. And the Nifty Bank also holding up just fine with a gain of 350 points. So thanks a lot for tuning into Trading Hour. And you stay tuned. Halftime report comes up next.